Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video where I take a look at three major currency pairs: the euro versus US, the dollar versus yen, and sterling versus US dollar in that order. Today's date is March 18, 2024. Price action is limited insofar in trading here today, but you always look for those breaks and those runs, and we'll outline what levels are key, what targets there are, what risks there are, what the bias is, all those sort of things in this video. So let's get started. I'm going to look at the euro versus US dollar. In my weekend video, I outlined levels to the upside and downside. What we saw first off in trading last week was that the market corrected the 38.2% retracement of the move up here. That level came in at 1.08312. And as most people know, I like to see at least the price move to and through the 38.2% retracement to prove that the correction has a little bit more of a bias shifting idea to it. Otherwise, it's just a plain vanilla correction and what has been a more of a trend move to the upside, at least since the middle of February. But that did not happen. We found support against that 38.2% retracement right here, and we did see the market move higher into the closing around the 1.0887 level on Friday. On the top side, we outlined that we needed to get above the 109 level as the first step, and we did that in trading today as the price did move above those levels, but the price could not extend above the other targets, which would be the 100 and 200 hour moving averages, and so we are seeing in the current hourly bar a rotation back to the downside on that failure. The move back below the 109 level sort of triggered that, and we're currently trading at 1.08909, so we're not far from where we were on Friday's close. And that is, has the market still, in a neutral territory. Still need to get and stay above the 109 level and then get above the 100 and 200 hour moving average to increase the bullish bias. Alternatively, we need to get below the 38.2% retracement and maybe this low price right here to start to look toward the 100-day and the 200-day moving averages and 50% retracement. All those are the targets on the downside for the euro versus US dollar today and going forward this week. If we get below all those levels, opens the door for the downside. So, this is what the price action roadmap would look like, getting up to and through there, and then up to the highs or down through here. But first off, we need to get out of this range right through here in order to get the things going here in this pair, and we can't do that so far today. Let's take a look at the dollar versus yen, and we know that we have those two central banks, the Federal Reserve and the Bank of Japan, meeting and announcing their interest rate decision this week. The Bank of Japan will announce their interest rate decision tomorrow, and the Federal Reserve on Wednesday. If the Bank of Japan is expected to come off of their negative interest rates and also yield curve control marginally, at least kickstart that process is what the thoughts are and what the market is somewhat expecting now. So that should strengthen the yen, all things being equal, and but there's all sorts of things that go into the which is brew, including the Federal Reserve, which may take away one of their easing biases or easing dots on the dot plot for 2024, given the state of the economy and inflation. That will happen on Wednesday. So what we're seeing is up and down price action in the dollar versus yen, centered around the 61.8% retracement of the last move to the downside here in this currency pair, from this high right here to this low right here. That 61.8 comes in at 149.196, and as you can see, the price action has been above and below that level. We are higher on the day. We did hold support today against the swing area through here, where we had different swing highs and lows going back in time, and broke above that level in trading last week. Also broke above the 50% retracement in trading last week, although it traded above and below the level with the swing area coming in play here before breaking to the upside. So if the price is going to go lower, we need to get back below that level. It couldn't do it earlier today, and then below the 50% retracement, and then look toward the 100-hour moving down here. On the upside, we do need to get and stay above the 61.8% retracement. We had one, two, maybe three different times where the price tried to get above that level. The most current hourly bars have been able to stay below those levels on the correction here. So watch this level around the 149.20 level. If you get above that level and stay above that level, we could see some more probing to the upside here for this pair going forward. That would be what the technicals would be telling us. Finally, let's take a look at the sterling versus US dollar, and similar to what we saw in the euro and the dollar versus yen. Seeing up and down price action on this currency pair. We came down toward the blue line here that represents the 100 bar moving average on the 4-hour chart. This is overlay of that moving average. And in trading here today, we've seen a number of different times where the price came down toward that blue line right here and found early buyers against the level, pushing the price back up. And where do we go? We went right up to the 50% retracement of this move to the downside, or to the upside here. That 50% comes in at 1.2746. So the battle lines are drawn here with the 100 bar moving average at 1.2725 as support, the 50% retracement at 1.2746 as resistance. Get above or below each of or one of those levels. Look for momentum in the direction of the break and hope that we get that further momentum for traders on the top side. We'd head toward the 100-hour moving average. On the downside, we'd look toward the 61.8 and break below or above those levels, and we have other targets to go for. So there you have it. A look at the three major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.